When the bond market breaks, most people don't notice until the mortgage rate jumps, the car loan gets more expensive, or the retirement account stops going up. That's where we are right now. In May 2026, the US bond market experienced one of its most severe sell-offs in years. The yield on the 10-year Treasury surged toward 4.6%. The 30-year Treasury briefly crossed 5%, a level not seen consistently since before the 2008 financial crisis. Bond prices move opposite to yields. So when yields rise this fast, it means investors are selling U.S. government debt aggressively. And they're demanding more money to hold it. This didn't start in May. It started in January, when Japan's 40-year bond yield exploded to 4% in a single trading session, a level not touched since the instrument was introduced in 2007. The 30-year Japanese bond saw its largest single-day yield move since 1999. Japan's debt-to-GDP ratio sits at 236%. When their government announced plans to spend more, not less, investors across the world recalculated their risk. Analysts at macro research desks are now describing the 5-year annualized return for global sovereign bonds as the worst in modern financial history. That's not a short-term blip. It's half a decade of destruction of bondholder wealth across multiple countries simultaneously. In the US, 3 forces are pushing yields higher at the same time. Sticky inflation, driven in part by energy prices tied to the Iran war and the Strait of Hormuz disruption. A federal deficit that isn't shrinking, and geopolitical instability that makes investors demand more compensation before they'll lock money into a 30-year instrument. Jamie Dimon, who runs JP Morgan, said it plainly. The level of things adding to the risk column are high. Geopolitics, oil, government deficits. They may go away. They may not. Here's the connection to your life. When bond yields rise, mortgage rates follow. Credit card rates follow. Student loan rates follow. Corporate borrowing costs follow. Job cuts tend to follow after that. The bond market is the plumbing of the global economy. Right now, multiple pipes are making noise at the same time.